Well, the markets are open, and we're going to bring in a little extra expert help to help analyze what we are seeing and what to expect as we get into our trading week this week. We have Dewey Strickler on the line. He's with AgWatch Market Advisors in Franklin, Kentucky. And again, my thanks to you, Dewey. You and I and Chris Swift all put on a marketing seminar at the Opryland Hotel last Friday morning for Unisouth Genetics Seed, and that was their annual convention. So I had a lot of good comments, heard a lot of people talking about the market outlooks that you and Chris Swift had provided. So again, thanks for working with me on that. I appreciated that very much, and a lot of good questions from the audience. So hopefully we can do that more in the future. Looking at our open this morning here, Dewey, let's go ahead and take a look at how we're opening up in the grain trade on the corn market first. Right now, we're 4 higher. March now, 366 per bushel. We have July 4 1/4 higher at 381 3/4. Let's look at December. We're 3 3/4 higher there at 396. What about the soybeans? Well, we had a big cancellation of Chinese purchases of soybeans this morning, but we had another purchase to unknown destinations. We don't know if those are kind of partly offsetting or what, but March soybeans are still higher by 16.5 now. 999.5 is the last trade. July up 16 at 1019.5, and September up 14 1/4. Dewey, what do you think of the open here?
Well, there's a couple of things. Actually, there's about 3 or 4 things that stands out here right now. One, we still got some ongoing concerns in Argentina, but I don't think that's really what's got the market up today. If you notice, we got the Dow up about 330-plus points here, so I think that's given a little bit of relief over to the commodities here as well. Secondly, last week, the funds covered 370 million bushels of their short corn position, 45 in the beans, and 115 in wheat. Now, they are still short those 3 commodities. Question is, they done this short covering, or are they going to go long? So I think this is giving the market a little bit of reason to see a little optimism.
Now let's take a look at the wheat as well and see how we're opening up there. Now, we have been dry in the southern plains. They are talking about potential for a little moisture moving in there maybe in a week from now. Let's take a look at our Chicago wheat right now, and we have the March up 9 3/4 at 458 3/4. July new crop 9 1/4 higher at 484. What about Kansas City wheat this morning? Well, with the March contract in Kansas City, we're trading at 476 3/4. That is up 11 1/4 in July, 11 3/4 higher at 509. I saw where some analysts said that that technical correction may have run its course last week. Does that appear to be the case here?
It may have, time-wise, we have not seen enough passage of time here for this correction to be complete. It could last another week here in the wheat, so I think it's a little bit premature to say that it is done right now.
So when you look at the overall picture here on the grain trade, the corn, the soybeans, and the wheat, do you think the wheat has more upside potential?
Yes, I definitely do. When you look at the wheat market here, basis the July contract, when wheat bottoms in, let's say, December or January, the average gain in wheat is about 18%, which would project the target up here around 516 basis July.
All right, we saw where the Minneapolis wheat had opened up higher too this morning. I want to take a quick peek at our cotton market while we're at it here. And on the early trade, March cotton 25 higher at 76.93. The new crop December down 6 at 75.46. We'll come back in a moment, and we will take a look at the livestock trade when we come back. Well, we're back with our discussion here with Dewey Strickler of AgWatch Market Advisors in Franklin, Kentucky. We talked about the big surge in the grain trade and the Dow a little bit ago. I wondered what the dollar is doing. A lot of times that can have more of a direct impact here on the grain trade. And right now on the dollar value, we are down 70 points on the March futures. We're at 90.200. June down 50 points right now at 89.880. And a lot of folks have been asking what's going on with the energy markets and in the crude oil market right now on West Texas crude. It is bouncing back after having a big drop last week. Remember when we were up over $65? Well, we actually got as low as $58.07 this morning, but now it has snapped back and it's at $60.09 per barrel on the March. That would be 89 cents higher right now. A wide trading range here this morning. of over $2.50. Now let's take a look at what's going on in our live cattle trade and get that market opened up. We have February now 7 higher at 126.60. April now up 68. We're at 124.30 and only a couple of ticks from our high of the day. We have June 72 higher now at 116.15. On the feeder cattle market this morning, we now have the March 12 higher at 146.32, and we have April up 25 at 148 even per hundredweight. So both of those within about a dime or 15 cents of our high of the day so far. What do you think might happen here, Dewey? We didn't have a whole lot of cash cattle movement, did we?
No, we didn't. We had a little bit of cash sold in Nebraska at 126. I think that the meats, really like the grains, are getting a little bit of lift here today from the stock market being up here. I think, that has created, let's say, a mood of optimism here right now, at least for the moment.
I was reading where the big commodity funds, they had long positions on live cattle. I believe something like 138,000 contracts or something like that. Is that going to be a drag on the market in your opinion?
I think eventually it will be a drag on the market here down the road. Noticed that they added a few positions here last week. I think the cattle market is going to undergo a phase of consolidation here for the next week, maybe 2 weeks here.
Is that normal for this time of year?
Well, I don't know if it's normal for this time of the year or not. When you look at, say, for instance, how the market has risen here since about mid-January up to where it was as of last week. We had a nice run. So when you look at that, the market has given some reversals. Yeah, you can expect to see some consolidation here, regardless of what the seasonal show.
Some kind of think it's a little bit amazing to see higher futures this morning when we had beef cutout values over $2 lower Friday.
Yeah, that's exactly right. Like I said, maybe the cash at 126 is giving the market a little bit of boost here, possibly.
Okay, let's check out our lean hog prices here this morning on a Monday morning and see how they're opening up right now. On the lean hogs, February 13 higher. We have April just up 1 tick, about 3 cents higher at 68.88. And the May down 28 cents right now at 74.50. A little bit of weakness in the deferreds, just a touch of strength in the nearby contracts. Don't know if you can read much into that yet. The pork product values were very, very weak on Friday.
Well, what I'm looking at technically is the market's probably not that far from putting in a bottom. We might see the April get a little bit of support at just a shade below 68 cents.
68, okay, all right. Well, very good. Thanks for talking with us, Dewey, about how we're opening up in the markets here today. Dewey Strickler happens to be with AgWatch Market Advisors, and he is based in Franklin, Kentucky. So next half hour, Janet, we'll be hearing from the other part of our triangle of analysts last week at the Opry Lane Hotel. We'll have Chris Swift in and get his thoughts on how we're opening up today.
Set the stage for the week ahead.
Yeah.
Thank you very much, Marlon.